bet today is the 28th of June, being a Sunday, and this video simply just going to be updating the higher time frame speculations that I had. So I recorded a video about 3 weeks ago in terms of speculating on the assets being the Nasdaq, EURUSD, dollar index, gold, as well as Ethereum. I'm pretty sure I touched on Ethereum, but we're simply just going to be updating those speculations, seeing where price is at this current point in time. So this would have been the Nasdaq speculation, and I was looking to see that sell side delivery occur. So we had that daily change in stay in delivery, and I wanted to see price action deliver back into this daily BISI and then continue that sell side deliverance through this weekly BISI. And then I just had a little note here being the inversion of this weekly BISI is required to promote that sell side delivery. And then in relation to EURUSD, the speculation at hand was looking for that sell side delivery motion. So ultimately we're looking for that delivery all the way up until this April low being a monthly BISI high. But I was stating the fact that price action should be observed once we engage with the equilibrium of the respective range. So that would have been just the short version of the text that are being displayed here. So in relation to the updates for these speculations, there is none for Nasdaq because the idea hasn't been invalidated yet, and the idea still has potential to unravel itself out in price, which we are going to take a look at. But for EURUSD, simply just forwarded the speculation, and the update would have been price action delivering down to the equilibrium. And the text here simply just saying that the equilibrium of the range has been engaged with at that -2, -2.5. And like I stated, price action should be observed once we have delivered into this range. So we're going to jump into the charts after we take a look at everything to see what we're looking to see occur next. But that would have been it for EURUSD. Now, I also had a speculation on gold, which I didn't actually send into this speculation chat. I'm not quite sure why. So I haven't put it into the updates, but we're going to take a look at that gold speculation as well. But now we're simply just going to take a look at the commentary I had in relation to all of the speculations. So this would have been posted on the 15th of June, being a Monday. And I simply just sent in these 3 charts. So I was simply just saying that my speculation for sell side delivery to engage with that previous month low may have been wrong. So we had a large new week opening gap from the Sunday opening, and a cracking correlation on the daily was served during the previous week's trading in relation to this week and this chart. And then I further went on to say that was simply tracking the hour 4 and daily change in stay in delivery, and the new week opening gap was going to serve as a drawn liquidity over the course of this week, and would simply look for valid framework to trade back into it. Now, depending when and how this gap is delivered into, it may have served as a point of inception for price action to continue that buy side delivery motion. So taking a look at the charts, this would have been the daily. So we had a daily cracking correlation that presented itself here. ES engaged with this low, Nasdaq failed to follow suit. Then we have a daily change in stay in delivery, and then we have that new week opening gap that resides right here. And then taking a look at the hour 4, we have that cracking correlation. You can take notice of the fact that it's residing inside of a -2, -4, -4.5 standard deviation, which projects for terminus. And then we have a hour 4 change in stay in delivery being right here. And like I stated in the text, the first screenshot was taken on June 12th. So that was me tracking it. This would have been before a New York AM session, as I always do a pre-session outlook. So that's where this image was from. And then this would have been the day I posted this message, and it's after we have that new week opening gap right here. So hour 4 change in stay in delivery, anchoring standard deviations to it, -2, -2.5, -4, -4.5 of the body standard deviation. So that would have been it until the 17th of June, being a Wednesday. And I simply sent in this chart and I said, am I still under the speculation that the previous month low will be engaged with? Because when we were speculating, we were looking to see this previous month low be engaged with. And we had further speculations in terms of we could end up seeing the OTE of the range being engaged with it as well. But the first point that price has to cross before we can even think about the OTE would be that previous month low, which is a monthly BISI high, because upon engaging with that previous month low, it could end up serving as a point of inception to continue the buy side delivery motion. So I was under the speculation that the previous month low will be engaged with, and that it was simply just difficult for me to speculate with a level of confidence at that current point in time. So I was simply just neutral and can only see a deliverance into that new week opening gap. The only thing that I had in mind was potential engagement with all-time highs, cracking correlation, and reversal back into the range. And I said that I will save such a speculation for a daily review, but I never ended up doing a daily review. So I could only see deliverance back into this new week opening gap, and I was neutral on the week. And we can also take an acknowledgement to the fact that this week was a consolidation week. The next time I ended up sending in a piece of commentary would have been the 23rd of June, which was a Tuesday for NASDAQ. So simply just sent in an hour 1 and 15-minute chart. Opened my chart to see a 1K point dump. Did not see it coming. Would have seen it coming if we engaged with the previous week high, but we faded it by a couple of points. Now, this is an image that was inside of the weekly review, so I'm not going to touch on it too much, but I just stated that this is why I said it was difficult for me to speculate with a level of confidence as to what price action wants to do at this current point in time. And then this would have just simply been the hour 1 chart in terms of that very heavy deliverance down towards sell side. Now, from the weekly review, we know that there was a cracking correlation that presented itself with the previous week high. So YM ended up engaging with the previous week high. NASDAQ failed to follow suit, as well as the fact that YM was continuously creating all-time highs. So it would have engaged with its respective all-time high. And then the same day, I sent in another piece of commentary. This would have been for EURUSD. So I simply just said, like stated on the higher time frame speculation video that I posted, price action should be observed as it approaches the equilibrium of the range, but ultimately looking for that deliverance down to the monthly BISI. So taking a look at that chart, we see EURUSD approaching the equilibrium. Price action should be observed once it approaches it, and we're ultimately looking to see a deliverance down into this monthly BISI overall. And then on the 24th of June, being a Wednesday, sent in a chart of gold, and I just said, like stated on the higher time frame speculation video, deliverance towards that monthly BISI. And then this simply would have been the chart of price action delivering down into that monthly BISI. And then switching back over to NASDAQ, 25th of June, being a Thursday, sent in this chart. My higher time frame speculation I posted, I'm starting to see it again. This AM move to overlap the PM move is intriguing work. So this would have been the chart that I was referring to. And then on the 27th, I'm actually just realizing this is basically this. So on the 27th, I sent in some charts. So just said I'm 100% going to be doing a weekly review as well as a higher time frame speculation update across all the other assets. But then I said that a NASDAQ dump pending, as the framework looked very, very interesting, as well as the fact that ES had a clean change in stay in delivery. So this was the framework that I'm paying attention to in terms of a potential dump may occur. And then the next piece of commentary was, like I stated yesterday, the initial higher time frame speculation I posted on June the 7th with the heavy sell side deliverance during the AM session on the 25th of June. It brought that speculation back into motion. So the move up during the PM session on the 24th of June was a low resistance liquidity run towards buy side. Algorithmic principles are set that if a high resistance liquidity run occurs, we can expect and anticipate for a low resistance liquidity run to paint over that high resistance deliverance and vice versa. Now, on that day, high resistance occurred during Asia and London, which I'd brought attention to that day. But we had a low resistance deliverance right through low resistance deliverance. This is why I stated intriguing works, because it's not the works of an algorithm. And then the time the move started was 9:30. So I'm relaying it to this 15-minute chart. Low resistance liquidity run. This was the high resistance liquidity run during Asia and London. Low resistance over this high resistance liquidity run. That is algorithmic. Low resistance back over this low resistance liquidity run. That is not algorithmic. These are not the principles set for the algorithm to follow. And that is why it was intriguing works. So the intriguing works is smart money. This is smart money's hand in the algorithm, tweaking it to their will. Now, if I'm correct with the speculation that a dump is coming, this just further confirms what I say about the entity being smart money, a cunning entity. And then I simply just grab something from last year. This would have been, I would have posted this on the 5th of June 2025. So the algorithm is designed to exploit human nature's flaws. Observe how price action prints and connect a trait or emotion with such price action. How can such price action exploit the uninformed? How can such price action engage with human nature's flaws? So to expand on this tweet, this first sentence is a little wrong. It should be the algorithm is designed in a manner that exploits human nature's flaws. It's not designed solely to exploit human nature's flaws, but it's designed in a manner that does so. When we think of the basic principles of an algorithm being consolidation, expansion, reversal, retracement, the likes of such delivery phases can bring forth certain emotions when it comes to an individual engaging with the markets. For example, consolidation can bring forth a level of impatience, expansion can bring forth a level of FOMO, X, Y, and Z, so on and so forth. Now, when we study price action on a deeper level and we see how price action delivers, you will come to notice that the way it delivers at certain times does it in a manner that is exploiting basic human nature, and especially the uninformed, exploiting the uninformed. If you're informed, you know that you're in a trade, it's a high resistance liquidity run towards your desired target. You know to be patient. You know that price is continuously going to potentially revisit your entry, deliver up, revisit your entry, deliver back up, and move in a very lethargic manner. Someone who is uninformed and doesn't know why price action is doing that when previously another trade that they'd taken was a low resistance liquidity run, they're going to be feeling a plethora of emotions that lead them to manage their trade in an ineffective manner due to the flaws of human nature. So simply just a definition on the word cunning. The word means having or showing the skill to achieve things in a clever or often deceitful or underhanded way. It describes the ability to get what you want through trickery or hidden intentions. So deceitfulness, underhanded way, trickery, hidden intentions, that is exactly what we're paying attention to. And that is exactly what I dub the entity smart money in terms of the way they look to navigate these markets when they do. And then I simply just sent in another piece of commentary saying that if anyone remembers during March, I was uploading videos stating where I wanted to see the low of the year form. So during the February-March time, I was speculating that I wanted to see the low of the year form from this monthly BISI, and then we can have that deliverance up towards buy side in a low resistance manner. However, price action faded and utilized the monthly BISI above it. Now, I only wanted this monthly BISI because it was located in a discount of the range. And I was observing higher time frame institutional order flow, which means the likes of such concepts are very important and crucial when laying out a story, as well as the fact that neither is there an equilibrium cracking correlation present. So we have the equilibrium of this respective range. We don't see NASDAQ deliver into it. ES, YM, and Russell also fail to deliver into their respective equilibrium. So there's no form of an equilibrium cracking correlation where one asset delivers into a discount and the other assets don't follow suit. But the failure to engage with the monthly BISI in a discount and then the deliverance to form new all-time highs occurred. I'm not sure if I have this anywhere on record. I haven't actually spent the time to check, but I was basically saying that I speculated that what is currently the low of the year will not be the low of the year, and we are going to revisit that in order to engage with that monthly BISI in a discount. And then I further went on to say that if this is the case, I would assume that something of status will have to occur globally in order to inject such volatility for a reversal. So basically what I was saying is that this is currently our low of the year. I speculate in the fact that this may not be our low of the year. We didn't deliver into a discount of this range. We didn't engage with the monthly BISI that resides in a discount. This is a respective monthly BISI high. This is a respective monthly BISI high. So they're two different monthly BISIs. This is why over the course of this deliverance towards buy side, I was speculating the fact that this 30,000, 30,500 level is going to serve as a point of inception for that sell side delivery motion, which is what we are kind of seeing at this current point in time. Of course, we're speculating on higher time frame charts, so it's going to take a lot much longer to come into fruition compared to observing intraday price action. But the next piece of commentary would have just been, once again, me being unhinged on the Telegram, but I may have just been getting ahead of myself, as the monthly chart should be adhered to first, which means certain things cannot occur on the lower time frames, being the weekly chart as well as the daily, in order to promote this idea of a full-scale reversal. Okay, so we're now going to just take a look at the charts, being NASDAQ, gold, EURUSD, and we're going to pay small attention to Ethereum as well. So jumping onto the charts, taking a look at NASDAQ, and this is what we are currently working with at this current point in time. So if I drop down into the daily, I was initially looking for price action to utilize this change in stain delivery, so these series of up close candles. I was looking for price action to utilize it as resistance to continue that sell side delivery motion down towards sell side, engaging with the previous month low, which would be this candle right here. So this candle that resides right here. Now, what we end up seeing is a very deep retracement back into this order block. Cracking correlations are establishing themselves, and now we're having movement down towards sell side again. This speculation may be coming to life again, as we've served another point of inception. Now, on this chart, I simply just have weekly standard deviation. So we had the weekly standard deviation, which we had 3 weeks ago on the chart, and now we have a body standard deviation anchored to these series of up close candles. So now we have a potential weekly change in stain delivery here. This would be a very nice weekly change in stain delivery, which is why I have a level of confidence to say that a dump may be incoming, because with this segment of price action, we don't have a weekly change in stain delivery. With this segment, we have potential for a weekly change in stain delivery. Series of up close candles. Now we're looking for a series of down close candles. But standard deviation anchored to the bodies, we see that -2, -2.5 projecting for the yearly opening. And with saying that out loud, I'm low-key realizing that this yearly opening isn't anchored correct due to... It's not anchored correctly due to the fact that we had contract rollovers. But we still have the yearly opening being projected with that -2, -2.5 from the body standard deviation. And this isn't random. Once again, this is simply just algorithmic. I've said it multiple times and I'll continue to say it. Standard deviations speak the language of the algorithm. And then we have that -4, -4.5 projecting for the monthly BISI, in which I was looking for that high or low of the year to be formed at. And then we also have a wick standard deviation anchored from this candle's high all the way down to this candle's low. We see again that -2, -2.5 in very, very nice alignment with, for one, this monthly BISI high and then this monthly BISI high. So if we jump onto the monthly chart, we can see that it's its own respective monthly BISI, and then we have another respective monthly BISI. So that wick standard deviation projecting very nicely for this segment of price action right here. Now, if we are to go and take a look at ES, we can see that ES has formed a change in stain delivery. So we have the series of up close candles, and then we have one clean down close candle, being this candle right here. So ES has changed the stain delivery before NASDAQ. And to be quite honest, I don't find this a problem, because if we take a look at the daily chart on ES, where we were speculating 3 weeks ago for that sell side delivery, during that video, I brought attention to the fact that ES failed to have a clean change in stain delivery the exact same way NASDAQ had a clean change in stain delivery. So it only makes sense in my head, the fact that ES has formed its change in stain delivery before NASDAQ has formed its change in stain delivery. And then when we take a look at YM, which has been presenting the cracking correlations. So we see this candle here is the first week of the month, and then we have the third week of the month, which was also engaged with. So we're having cracking correlations presenting themselves, as well as the fact that YM is continuously making all-time highs. So if we bring it back to this commentary I sent in on the 17th of June, being a Wednesday, I said that potential engagement with all-time highs, cracking correlation, and reversal back into the range was the only potential that I could see in terms of price action doing, which is what YM has served for us on a platter. Now, what I would look to see would be YM form a change in sustained delivery as well. So I'd want to see YM have a series or just one down close candle, but we'd have to close below this candle right here. And this is all to promote the idea of price action actually having a dump down towards sell side. Because the reason why I said on the very last piece of commentary that I simply may just be getting ahead of myself and that the monthly chart should be adhered to first is because if we take a look at the monthly chart on the NASDAQ, there's a bullish imbalance right here, a monthly bullish imbalance. These are a series of down close candles delivering into a monthly BISI. This segment of price action can serve as a point of inception to invite for buy side delivery if the signatures are present once we come down and engage with it, which is why I was saying that certain signatures cannot be displayed on the weekly and daily if we are to come down and deliver into this monthly imbalance. We don't want to see signatures and signs of price action looking to utilize it as a point of inception for buy side delivery if we deliver down to engage with it. But jumping in, taking a look at the daily chart, I do have a standard deviation anchored from this candle's high. So from this candle's high all the way down to this candle's low, we see that -2, -2.5 in alignment very nicely with the previous month low. Again, like I stated in the previous speculation video, when price action is to engage with this previous month low, price action should be observed. It can more than likely serve as a point of inception to continue that buy side delivery motion. Unless we begin seeing signatures that we want to continue down towards sell side, engaging with the OTE of this respective range, and then potentially even breaching the low of this range altogether, price action should be observed once we engage with that previous month low. So that would be it in relation to NASDAQ. So going into next week, what I'd be looking to see is closure below these series of up close candles to form a change in sustained delivery. A cherry on top would be closure below this weekly imbalance right here. That would be a promotion of sell side delivery, like I was saying in the first speculation video. The inversion of this BISI is required to promote sell side delivery. Would also be looking to see YM begin following suit and have heavy sell side deliverance. Now, before I move on to EURUSD and gold, should take a look at the economic calendar to see what we have ahead of us in order to see the potentiality of such an idea unraveling itself out in price. So with the observation of the economic calendar, no news Monday, no news Tuesday. Wednesday, we have high impact news at 9. We have high impact news at 10. And then Thursday, we have high impact news at 8:30 being NFP, Friday being a bank holiday. This economic calendar is shifted. It looks very weird. For one, bank holiday again on the Friday. And with Friday being a bank holiday, it shifts NFP to Thursday. And then we also have high impact news at 9 and high impact news at 10. Very first of the month for July on Wednesday. To be quite honest, I don't care for whatever Fed Chairman Warsh has to say or whatever happens during the PMI or whatever occurs during NFP. I only care about what times these high impact news events are occurring at. And this is my first time even taking a look at the economic calendar for the next week, and I'm seeing that it shifted. Once again, I'm simply just viewing this as smart money bending the algorithm to their will. But of course, like I say every time, it's a lot more easier to just take it day by day. So we'll look to see what occurs over the course of this coming week. But jumping in and taking a look at gold. So gold in EURUSD is going to be rather short. Gold will be short. We're simply just looking to see that deliverance down into that monthly BISI, which has occurred. Now, this has potential to serve as a point of inception. I don't believe so. I do think that we should see a continuance down to the monthly BISI low, or perhaps the consequent encroachment of this monthly BISI, and then that may have the potential to serve as a point of inception, as well as the fact that we can also take an acknowledgement that we're about to shift into a new quarter. That is actually a very important factor that I had forgotten in relation to this chart, because I don't have the quarters laid out on my chart, but we are also about to be shifting into a new quarter. So that is something to 100% take an acknowledgement of. But switching back into gold would simply just be looking to observe price action as we are delivering inside of this monthly BISI, as it may invite for a point of inception for that deliverance up towards the buy side. But as of right now, I'm neutral on gold. There's nothing that I am looking to see, as what I was looking to see has already panned itself out in price. And then switching to EURUSD. So taking a look at EURUSD, we've had that deliverance under the equilibrium of that range. This is where that -2, -2.5 is. Now, ultimately, I am looking for a deliverance down into this monthly BISI high. So I would not want to see this segment of price action form a smart money reversal. I'd want to see price action reaccumulate orders to continue that sell side delivery motion. So what would that look like if we drop down onto the, I'm not sure if this chart would be marked out appropriately. Yeah, so if we just drop down to the daily, so daily chart, we've delivered into the equilibrium of that respective range. What I'd be looking to see is price action retracing back into this range, forming a point of inception. This would be your inception continuation model, and we continue that sell side delivery motion. We can see a standard deviation that has been anchored here, -2, -2.5. That is where price action is currently located, -2.5 being respected very nicely. I'm not looking for a smart money reversal. I'm looking for a reaccumulation, redistribution of orders. And in order for that to occur, what that looks like is deliverance. If it's above the equilibrium, that's fine. If it's below the equilibrium, that's well and good, in terms of it's a sign that order flow is rather heavy, in terms of we want to deliver in a certain direction by a certain time. But retracement back into this range, and then we continue down. We have that -4, -4.5 that resides right here. That may serve as a point for price action to accumulate orders for a little bit and continue that sell side delivery motion. So after the accumulation, it would deliver down into that monthly BISI. So we can see this -4, -4.5 of the daily standard deviation resides just above the monthly BISI. So the blue line being the monthly BISI. So we know that -4, -4.5 is a point of terminus. So the move would end here, meaning that we shift into a new phase of delivery. So if you've watched the inception model, delivery phases part, consolidation, expansion, potential for a reversal to occur after the expansion into that monthly BISI. But this is me projecting way ahead of time. We are nowhere close to such a speculation yet. As of right now, what is important to do is simply just observe if price action is looking to reverse back on this range completely or continue the sell side delivery motion, because we have now just engaged with the equilibrium of this respective range, and we are located at a -2, -2.5, and we know this is used for either a smart money reversal or reaccumulation, redistribution of orders. And then lastly, just taking a very, very brief look at gold. At Ethereum. Honestly, not much to say. The only thing I can say is there's potential here in terms of we have a Kraken correlation that has established itself. The last time I touched on Ethereum, I stated the fact that in an ideal world, we don't take the low of 2025, and the idea still has potential to pan itself out. So with Ethereum, what we were looking for around here, or no, it was around here, we were looking for deliverance up towards the buy side, deliverance down to engage with this low right here, point of inception, to then continue back up to the yearly opening. Okay, so recording low-key just stopped. I'm not sure where I left off, but I know that I was saying that was looking for price action to engage with this low on Ethereum, and then potential point of inception for that deliverance back up to the yearly opening. Now, with the engagement with this low, I was looking to see a Kraken correlation present itself. The only problem was BTC ended up following suit and engaging with this low as well. And then I further went on to say that the idea isn't fully off the table until this pool of sell side is engaged with. So within my eyes, until we engage with this point of sell side, that is when I can say this idea is no longer on the table, and we'd have to be searching for a new point of inception under this pool of sell side right here. Now, with this cracking correlation, potential change in stay in delivery. So you'd want to see this imbalance be inversed. So with the inversion of this imbalance, it's ultimately going to mean that we may have had a change in stay in delivery. So series of down close candles would look for a series of up close candles to close above the series of down close candles. Engage with it, closure above this imbalance is going to be utilized as support because it was just utilized as resistance. And then we can have that deliverance up towards the buy side. Already can look to anchor a standard deviation, and we can see wick standard deviation projecting for this segment of price action. And what this is specifically projecting for is the monthly BISI. So it's the monthly BISI on Ethereum that it is projecting for, being the month of February. And then we have that -4, -4.5 projecting for this rejection block, which is in alignment with what would be the current high of the year. But that is quite literally it in relation to Ethereum. I still don't have any interest because even when I'm observing the lower time frames, there's no framework for me to look to say, okay, I'm willing to get on side with it. So we have this cracking correlation that presents itself here. We have this one down close candle being a rejection candle. We open, deliver a lot of sell side, and then we close really close back to the opening. And then we can project this as an order block. Now we have a very deep retracement into it. Since this is a rejection candle and it's an order block, we're going to have to use the entire candle in order to look to say, oh, are we respecting the mean threshold of this order block, in which we are. So if I just enlarge in Ethereum, we are respecting the mean threshold of the order block, and then we have this being the order block, and this is the hour 4 chart. And then we drop down into the hour 1. There's no framework here in terms of series of down close candles. We do not have a series of up close candles to close above. And then the 15-minute is the only thing that had something clean, which I'm already watching, to be quite honest. So you have that 15-minute standard deviation, and we can see price action engaging with it, and we slip into a phase of, well, just lethargic price action. So as of right now, I'd look to see if the weekly is going to promote the idea that I have on hand. If we jump on and observe the daily chart doesn't look too promoting of the idea that I'm looking to see unravel out. So that is the reason why I'm still currently neutral when it comes to Ethereum. But that would be it for the higher time frame speculation update.